Tony from Buildium here, the platform that helps property managers master their everyday operations, make their residents feel at home, and take on more doors. Today, I'm talking with Daniel Craig, CEO of Profit Coach and lead author of the NARPM Accounting Standards, about how property managers can be gathering their business results for 2020, starting to forecast from an accounting standpoint, and really looking forward to 2021 strategically. How you doing today, Daniel?
Hey, I'm doing great. So glad to be on the phone here. I love property management. I love the business model. Certainly 2020 has thrown some curveballs, but a lot of great things have happened. And you know what? Entrepreneurs are people that take advantage of change. This has been a year of change, so it's a year of great opportunity. I'm excited.
Yeah, absolutely. And we're still very much in the middle of all of it, right? We're still in the middle of a pandemic. And first question for you, what kinds of adjustments are you seeing property managers make to their accounting strategies to handle all the curveballs that they've been thrown in 2020?
Yeah. To me, it's perhaps maybe a little bit more about financial management as a whole than even just narrowly accounting strategies. And we are really seeing some good things in this area where companies are realizing that what's been an easy to manage cash flow business needs a little bit more monitoring now, right? So property managers get very used to the fact that on the 5th of the month, they get a big influx of cash every month from management fees. Well, there's been a lot of concern around that, right? With delinquency and what's potentially going to happen. And so I think in some ways, the change that we've seen in this environment has caused property managers to be more attentive to owning the financial outcome of their business. We're huge on that at Profit Coach. And that's probably what I would just put out there right at the outset of this conversation is the thing that's exciting to see is entrepreneurs becoming more engaged with owning the financial outcome of the business. Too often as entrepreneurs, and I think as property managers, we get really obsessed with the day-to-day operations of the business, getting the tenant in the building, getting the maintenance taken care of, getting the owner statement out. And we should. But at the end of the day, if you're the CEO of a property management business, your number one job is to own the financial outcome of the business. And so I think we're seeing more of that happening, to answer your question, in a couple of specific areas. Number one, we're seeing entrepreneurs tracking year-over-year variances more closely. So in the past, what happens this year is what happened this year. But now people are looking at what happened this year and how does that compare to what happened last year? People are paying more attention. Secondly, people are starting to get more clear on their cash position. Again, it's been a fairly easy to manage cash position business. And COVID's brought some uncertainty around that. And so people are getting more clear on their cash positions. And finally, getting more clear on potential downsides. What would happen to my business if we ran a 15 to 25% delinquency rate? And so I think those are some of the things at a high level that property managers are getting more clear on, some of the strategies they're enacting to deal with this uncertainty.
Yeah, and that's great to hear. And it's great that people are starting to think that way, because really, if you have contingency plans or you have other ideas of how you can flex, given all of the change that has been necessary over the past 6 months, you'll be in a better position. Now, I know you are big on end-of-year planning, of course. What are all the major pieces that really go into end-of-year planning from your perspective?
Yeah, like so many things, Tony, a lot of this comes back to your mindset around planning and around the future and around the way you evaluate the past. And it's really easy for us as entrepreneurs to, sometimes when we're in a good mood at least, to just kind of ignore the data points that don't really fit into our vision of what happened in the past, and ignore the data points that might speak to a vision of what we don't want to happen in the future. And so we can kind of just have a little bit of a mindset that just says, hey, I didn't really have control over what was in the past, and I'm really hoping that these outcomes are going to occur in the future. And the problem with that is that it misses the fact that, to a large extent, what happened in the past in 2018 or 2019 or 2020 was really a result of our commitments. Now, to be fair, there are unexpected things that absolutely happen, like COVID. Who could have forecasted COVID?
Nobody.
But to a large extent, the way that the past plays out is in a large measure an extension of what our commitments were. So if we said we wanted to grow 100 doors in 2020, but we didn't, we have to ask the question, were we really committed to that? And so to answer your question, as people think about planning in the future, the first thing that we really encourage folks to do, and we have a whole exercise around this with our clients and profit coaches, to look back and say, okay, what were your goals in 2019 or in 2020 in this case? And what did you say you want to have happen? And what did you say your commitments were? But based on what actually happened, what turned out to be your commitment? Maybe you were actually more committed to spending time at the beach than to growing your business, right? So the question is, why is this helpful in terms of forecasting for the future? Because it brings clarity to, as you think about adding 100 doors in 2021, what do your commitments really need to be? And where do you need to see a shift in your commitments? And that's the big takeaway. How do my commitments need to shift in terms of what's really important to me, in terms of the outcomes that I'm going to manage, in terms of the plans that I'm going to make in order to actually add those doors in 2021? So that's step one. Look back, evaluate your commitments, and really try to get a sense of how your commitments need to shift to actually achieve the outcomes that you want in the future. Secondly, it's just putting the numbers in the spreadsheet. It's forecasting essentials that I would define as the following. Number one, you need to go through an exercise of forecasting that's accurate. You need to have a basic framework for being able to take what happened in 2020 and project that into 2021. We'll talk about that a little bit later.
Right.
Next, a forecasting framework that's simple. If it isn't simple, then chances are you're not going to do it, and you're not going to do it well. If you're spending a week to 2 weeks trying to crank out a budget, it's just too painful. And when COVID happens and that budget's obsolete, you have to refresh it. You're like, oh, that was way too much work. I can't refresh it. It becomes obsolete.
Right. It has to be flexible, agile enough.
Exactly. And that brings me actually to the third point, which is it needs to be flexible and agile, or we call it recurring. So thank you for anticipating that. You have to be able to go through an easy recurring reforecasting exercise to make changes on the fly so that it continues to stay useful. And then finally, it needs to be realistic. It's fine to have BHAGs, big, hairy, audacious goals. Thank you, Jim Collins. But your forecast really needs to be realistic. It needs to be based off of past performance. And if you're going to make a deviation from past performance, you should have a detailed, realistic plan that articulates a justification for deviating from past performance. So those would be four things in terms of forecasting essentials. Really needs to be accurate, simple, recurring, or agile. I like the use of that word. I'm going to change my notes to include agile. And it needs to be realistic.
Yeah, that's a great point. And I know, obviously we've been going through the COVID pandemic for over 6 months now. And some of the good news around that, although there's some definitely not good news that's come along with COVID, is that people do have the experience to see what has happened to their business in their market. Because different markets are going to react different ways. And so since we have, we're getting more and more information and data on how this has impacted property managers, then they can take that information, look at their own business plans, and then adjust for next year. Now, as far as your clients and planning and forecasting, what do you find that your clients tangibly get out of that kind of mindset of planning in general?
Yeah, I alluded to this a moment ago, but again, I think what this really comes back to is a mechanism by which entrepreneurs and property management entrepreneurs can own the financial outcome of their business.
Right.
And I would articulate that as having three aspects. Number one, setting realistic targets for the future based on past performance. We talked about that a moment ago. Secondly, creating a monthly game plan or forecast for how you're going to hit those targets. So it's one thing to say, we're going to, have 17 new units or 30 new units this month, and we're going to generate such and such management fees. Maybe you have a goal like we're going to hit 2 million this year. But if you say we're going to hit 2 million this year, but you haven't done the math to know how many doors that means you need to add on a monthly basis, then you really haven't owned the financial outcome of the business. And I think that's one of the big benefits that we'll get to in a moment of forecasting, is it helps bridge the gap between aspiration and reality. But back to owning the outcome, number 3, you need a framework to hold yourself accountable to the monthly game plan throughout the year. So you have to know in February when you're getting off target. So many of us as entrepreneurs, we maybe lay some plans, we run through the year, we get to the end of the year, we ask our accountant or CPA to send us a P&L, and we look at it at the end of the year, we're like, shoot, we hit the target, or shoot, we didn't hit the target. But what if you could know that you were on track or off track within a month or two into the year instead of getting to the end of the year? And so to me, owning the outcome is about setting realistic targets, creating a monthly game plan, and then holding yourself accountable to that monthly game plan. So I think that what our clients get out of this planning is the ability to do those 3 things. So at the end of the day, I see forecasting as the best way to do those 3 things.
Sure.
And specifically, forecasting does a few things. In addition, it really helps. The exercise of forecasting helps entrepreneurs clarify their why. Mm-hmm. This is really big, because if you swim in the entrepreneurial stream, you're around a lot of people who are encouraging you to do big, crazy things, and that's good. But bigger is not always better, and bigger is not for everybody, right?
Right.
And
it's a lifestyle decision.
Exactly. And so forecasting really helps you say, okay, why am I in business after all? And I think this is really a good time for all of us to be thinking through these kinds of questions as it relates to the kind of change that we're facing. Why am I in entrepreneurship? Am I getting out of entrepreneurship what I went into it for? And, for example, what do you want in terms of, I like to think of it, freedom in terms of 4 areas. Freedom of time. Are you getting that freedom of time? And if not, what's going to need to change? Do you need to slow your growth pace down in order to get that freedom of time? Mm-hmm. What about freedom of money? Are you getting that paycheck in terms of profits and your salary that you went into that business for? Or maybe you think that you need to grow way more than you need to actually grow in order to get what you want in terms of that owner compensation paycheck. What is your, desired freedom in terms of relationships, the people you want to be working with, or your freedom to pursue relationships outside of business? And lastly, your freedom of purpose. Is your heart's purpose really in alignment with this business that you've got going right now? So forecasting can help clarify some of those things, particularly on the financial side. What does my business need to be and need to look like in order to achieve my why for why I'm in business in the first place?
Yeah,
secondly, forecasting can help you bridge the gap between aspiration and reality. I touched on this a moment ago, but the truth is often we're very tempted to just throw numbers at the board, and it gives us a little bit of a thrill in the moment to say, yeah, we're going to add 300 doors this year. Yeah, get the team to do the rah thing. But somebody in the room has to ask the question, okay, so how many doors does that mean we need to add, on a monthly basis? Okay, well, roughly 30. Well, how many are we losing a month right now? Well, roughly 10. Okay, so that actually means we need to add roughly 40 doors a month to hit that additional goal. Yeah, okay. Have we ever done that before? No, the most we've ever added is 10 a month. Okay, so then how is this actually going to occur? So forecasting forces those kinds of clarifying conversations. Thirdly, forecasting helps simplify business decision-making. This is critical. At the end of the day, if you want to be a successful entrepreneur, you need to move from gut-based decision-making to data-driven decision-making. And forecasting can help you do that. If you want to run, let's say, a 20% profitable property management business, you have to be able to answer the question, can we afford to hire this new person on our team that we think we need to hire and remain profitable? A forecast will help you answer that question very definitively. Number 4, forecasting helps you move from reactive to proactive. It helps you stay ahead of the change curve. And one of the things that we did with our clients this year was early on in April. So this is, very early on in the COVID experience, we helped them create a financial downside forecast.
Oh, wow.
So that they could get to a place where they were able to say, hey, if things go really south here in terms of delinquency and vacancy rates, what are the potential downsides and what kind of expenses are we going to need to cut to survive this? So very early on, they're getting poised for a proactive response instead of, realizing that they need to make a change when, their credit card bill bounces, etc.
Yeah.
So those are some forecasting basics and some things that I think you can tangibly get out of the forecasting and planning exercise.
Yeah, I mean, of course, like forecasting is important for any business, right? And then tracking those results over time on a monthly, weekly basis, even for some. And if you're not doing that regularly and you're not communicating where you're at, especially if you're a mid-sized company, how could you expect other people to know where you are and then hit those metrics and hit those KPIs? Mm-hmm. So, of course, really important, and you're big on that. So, I wonder if you could give us a little look into how you forecast for your clients. And
sure. Yeah. So obviously, I wish it was as simple as, step 1, 2, 3, and you can just put these 3 numbers in a spreadsheet and you'll get an accurate forecast. It's a little more complicated than that, but frankly, it's less complicated than probably a lot of people make it. I'm just going to, Tony, if it's all right, just show a little bit of how we do this here at Profit Coach. And I won't get into all the nuances of this spreadsheet, but at least I'll be able to help folks kind of get a little bit of a bird's eye view of a basic methodology. See, I already switched out.
Look at that.
Word. Great. And that's realistic. And the basic way that we've done that is to start with the non-financial position of your company. So what is the growth that you anticipate? You start with, let's say, 345 units. You put in how many units you think you're going to add on a monthly basis. You put in your churn rate, so you understand how many units you're approximately losing. This gives you your ending units number. Then you're forecasting, okay, what's our occupancy? All right, it's about 90%. So our occupied management fee generating units is about these numbers here. Then we're getting into forecasting other things like new leases, applications, or renewals using data that's readily available out of a property management software. And then we're taking that data and we're translating that into a financial forecast. Very simply, hey, our average management fee right now is $130. We're going to multiply that times the number of occupied units, and we get our management fee forecast. Things like leasing, renewal, and application fees are a little bit more seasonal, so that's a little bit more complex, but all of this boils down to a monthly forecast that's accounts for seasonality, the leasing season in particular. Sure. And then from there, we're able to start putting in some expenses. One of the major categories that we focus on in terms of expenses is direct labor. And so people just need to plug in their anticipated salaries, whether it's employees or contractors or third-party services or VAs. And we take a pretty detailed approach to forecasting labor, both on the direct labor side of things and on the management labor side of things. And then when it comes to facilities, other operating expenses, payroll taxes and benefits, and advertising, we're using a very rolled up summary approach. And we're basically just looking at the last 12 months average of how much was spent in each of those categories in terms of a percent of revenue. Plug those percentages in, and literally with this model that we have built for our clients, within about 30 minutes, we can come up with a very accurate bottom line that says, hey, we're actually going to make, 96 grand in profit this year, 11% profitability. And so the basic method that we're using here is we're starting with a non-financial picture, moving to the financial picture, and then finally, we're moving toward the forecast versus actuals. And this is honestly where the magic is. You have the forecast, and then as the actuals come in, you're tracking your variances. And we have some dummy data in this particular example, but this person's 42% off his revenue forecast, etc. So we went through this exercise with our clients at the beginning of COVID when we started to see, late fees falling off or NSF fees falling off, and we're able to account for these things. Or leasing, we saw some drop off in leasing because there was delays in people being able to fill those vacancies, etc. Yep. So that's the basic flow. And while I've got this up, I'll just show one last thing, and that is related to one of your later questions, but I'll go ahead and kind of just touch on it briefly here. Sure. And that is the ability to forecast the downside. And so we built a model, as I mentioned earlier, to help our clients forecast the downside things like, all right, what kind of delinquency are you anticipating? What kind of change in average rent or other categories? And that way you can have basically your plan A forecast and then a plan B that helps you understand and have you some concrete awareness around what kind of expenses you might have to cut to survive a negative plan B scenario.
Yeah, those are great tips. And, like as you mentioned, we will supply your contact info so people can reach out to you in case they want to see that.
Yeah, absolutely. Yeah. I'd be happy to share this forecast with anybody. You can just email me, Daniel at pmprofitcoach.com, pmprofitcoach.com, and just, email me subject line forecast. And I'm happy to send this model out to anybody who'd be interested.
Yeah, and since we're doing plugs now, another thing that people should be aware of on the Buildium side of the equation is we recently launched something called Analytics and Insights. So it plugs into all of the accounting data that property managers store in Buildium that they use Buildium to track, and it actually pulls it into different data dashboards. One focusing specifically on leasing. So just reminded me as we were going through this and talking about forecasting and making sure that you're staying on top of those goals and knowing where you stand. Just makes it a little bit easier for those who are using Buildium. Now, next question for you, and you brought this up a little bit before, but I think it's great for us to dive in again, is really cash balances and how they're important to any business. How do you typically advise your clients to think about their cash reserves, especially given everything that's happened with COVID?
Yeah, well, I wish I was a prophet, but I don't know that anybody knows what the ultimate outcome of COVID is. And I certainly don't think we've seen the end of it. And personally, I'm not actually inclined to think that we've seen the worst of it. Because the reality is some of the impact of, a lot of the impact of COVID has been largely mitigated by trillions of dollars being pumped into the system. Yep. So I would say that, here's what I would tell you. Normally, our advice to clients is to have 2 months of expenses free and clear in the bank. Okay. So that advice is something that I learned from a mentor of mine who's the author of Simple Numbers, Straight Talk, Big Profits. Excellent book on small business finance. Simple Numbers is the title of it. Greg Crabtree is the author. He really recommends 2 months of expenses free and clear. That's what he considers to be a fully capitalized business. But hey, we don't know what's going to happen. And I would recommend saving 4 to 6 months, if possible, in the bank. So I guess it's a little bit TBD, Tony, in terms of what's actually needed. I would say this: think judiciously about your PPP funds or whatever kind of aid you got. And before you think that this is your time to just, take your business to the next level with a brand new advertising campaign that you've never done before, but you've always wanted to sink $100,000 into, think again. You might need that PPP in just a few months.
Yeah, that's a great point. And of course, we don't know how COVID is going to pan out. We're still very much in the middle of it. And I think a lot of people are holding their breaths for, October and November, just seeing how things start to pan out then. So fingers crossed. Hopefully things get better for everyone, and it takes us by surprise in a good way.
Yeah.
Now, as far as the next question I had for you is, accounting doesn't change even during a pandemic. So that doesn't change, but business strategy certainly has. So have you seen sort of areas where you would recommend that PMs look to adapt their businesses, new verticals, et cetera, like where they're doing well, where they're not? And I'm sure that varies.
Yeah. Well, as a whole, PM businesses have actually fared quite well. I would say probably some of the best. I know that there's some industries, like if you were in the mask industry, you're probably doing really well right now, right? As a general rule, PMs have done quite well. And I think a lot of PMs have actually surprised themselves. So I don't think that you need to switch verticals. Here's what I would recommend, though. Number one, if your fees are not where they need to be to your owners or tenants, make that change now. It isn't going to get easier. And I would suggest that you think of this as an opportunity for you to leverage the value you created over the last 4 months with your owners. Hey, Mr. Owner, we've gone through some crazy times, but guess what? You've gotten a rent check every single month. That's because we're an awesome property management business. Because truth be told, most single family residential property managers or smaller boutique residential property managers experience pretty low vacancy, at least compared to large multifamily. And so probably most Buildium users actually did very well for their clients in terms of delinquency rates. Leverage that and make sure that everybody's on your plan A contract. That anybody that's hanging out there on 5 or 6 or 7-year-old contracts, get those people up to date. Consider this to be also a good time to take a look at other ancillary revenue opportunities, because you're losing some revenue and late fees. And so I would, again, say this is a good time to think about other opportunities for increasing your revenue per unit to, again, allow you to provide a reliable, ongoing property management service into the future. So number one, now is the time to reevaluate your fees. Number two, consider charging a management fee no matter if the property is vacant. This would represent a very significant contract shift for many users. But to be honest, I think we saw a really good use case for why charging a management fee no matter what is a really good idea. And if you can make that switch now, I would really encourage you to do that. Number three, stay agile with your labor. And that's because labor is your biggest cost center. And it's a tough conversation because we're talking about people here. But I think you need to make sure you have the flexibility to dial your labor back as needed to account for changes in your business. So those would be 3 big ones. And here's a bonus one, Tony.
Oh, thanks.
Consider getting out of your lease, because if COVID has proved anything to us, it's proved that we can actually work quite well remotely. And so I would work on negotiating that lease, because that's probably for most people around 3% of revenue. Get out of that lease, you're talking about a 3% drop to the bottom line.
Yeah, that's a great point. And actually, I spoke with a property manager, Mitch Dominski, out of Ohio, a couple of months back, and he basically went through an event with his business where there was an issue with the building he was in, and I think it collapsed or something like that. This was like pre-COVID. And then so once COVID started, he basically already had everything remote. He was already ready to go, and he was like, oh, kind of a blessing in disguise there. So it is possible, and you don't need a building like collapsing on you to make that decision or call, obviously. But a lot of property managers who use Buildium just love the fact they're able to do everything remotely. They have nice apps that they can use. And I think that the technology is there. It's just a matter of them keeping up your culture, starting to get people accustomed to it, and then just making it happen.
Absolutely.
Now, of course, we talked about the biggest unknown for COVID, or the biggest unknown for property managers going into 2021 being COVID. What are some other ones that you might that might come to mind?
Yeah, I mean, obviously the question here is just how long is COVID going to last, and the effects of it on owners and tenants. And so I think there's just continuing to be questions around: have we seen the bottom of the barrel in terms of delinquency yet? I kind of don't think so, with unemployment and stimulus checks continuing to flow. At some point, those are probably going to stop, presumably. I don't know, right? Who knows how long they're going to be able to keep finding new money. Right. But at the end of the day, I would just say that to me, that still is the biggest unknown, is considering what would a pretty negative plan B look like for your company? What kind of shifts in a short-term hurry would you have to make to be able to account for those kinds of changes? So I'd probably just stick with COVID. In terms of other unknowns for property managers going into 2021, it would probably continue to be around the aid that the government's going to provide for small business. So that's probably another unknown in terms of planning your staffing needs. Those are 2 big ones that come to mind, Tony.
Yeah, those are great points. And of course, election here. And so it's just, there's so much that can happen over the next 3 or some odd months. Yeah. So it's definitely not short of entertainment for everyone out there. It's which is a great reason to
be aware of your numbers, and know how different scenarios are going to impact your numbers.
Yeah, for sure. Now, as far as success stories or lessons learned, I'm curious what success stories or lessons learned that you've heard from property managers in your conversations throughout the pandemic.
Yeah. So these just pulling from different conversations at a high level. I don't know that anybody has quadrupled their business this year, but for a lot of people, there has been significant growth in profit and even in revenue. And I think that there's a few things that I've heard as themes in terms of success stories from property management businesses. Overall, like I said, a lot of PMs are doing well. And I think some specific contributors to that are, number one, we're seeing property managers having ability to pivot pretty quickly. And at the end of the day, that's small business America is we can pivot and we can do it quickly. We're pretty agile as small businesses. And so kudos to you, property managers. We're running these small businesses. Again, so much of the economy is dependent on what you're doing. So just, hats off for pivoting, for making the changes. Secondly, I think the success stories that we're seeing are tied to the fact that business owners have had some margin to change, meaning if they weren't running things super tight to begin with, they had some margin for error. And I think that's worth pointing out, because as you look into the future, try to maintain that margin for error. I made a comment to a coworker the other day. Success in business is literally, trying to hit the target within 20%, right? Typically profit is somewhere in the range of 0 to 20%. If you're more than, 20% off, you're probably losing money.
Right.
And so we generally have a pretty small margin for error. Try to keep that as big as you can. In other words, be conservative. I would encourage in terms of maintaining cash balances, maintaining profit margins that give you some cushion and some flexibility. And I think we've seen business owners be successful as a result of that. Another one is that a lot of business owners have taken this year to prove to themselves that they can significantly cut expenses. This is huge because COVID has basically starved out our travel budgets. We were able to cut those, and our businesses are still surviving. In fact, maybe we have more focus as a result of less travel to implement good ideas. Sure. But other aspects of expense cutting too. I've just seen business owners tighten up the belt in a good way. That's, again, dropping more to the bottom line and providing them more of that margin I was just talking about a moment ago.
Sure.
And then others have taken the opportunity to restructure the way they do business with their owners. That's probably one of the big takeaways from COVID is it's an excuse for just about anything, right? You can blame pretty much anything on COVID. And so I think some business owners have taken the opportunity to restructure the way they do business, to change things around for the better. They're leveraging this opportunity to create change, to do that in their business for significant positive results. And then lastly, I think owners or entrepreneurs are either anticipating or experiencing an increase in new clients. I think there's a little bit of a lull for a number of companies, probably in the April, May, June season, but we're seeing that pick up. And so I think companies that are ready for that growth, that are anticipating it, that are maybe even prepared to pick up the small portfolios or larger portfolios that might be coming available, with some people trying to get out of property management, which no doubt has proved itself once again to be a stressful business. People that are poised for metabolizing that kind of opportunity, I think, are going to do well. So I think those are some of the opportunities, some of the ways that business owners are turning these lemons into lemonade.
Well, Daniel, it was great talking with you today, and I thank you for all of your insight and all of the strategic suggestions you made today, and I know that people out there will as well, and definitely appreciate your dedication to the industry. It's just great to see, and great to have you on the show. So,
hey, Tony, thank you, and appreciate your providing this good content in terms of Buildium and all you guys do to the industry.
All right, and for those of you watching out there, you heard how you can get in touch with Daniel. What was that email again, Daniel?
Yeah, Daniel@pmprofitcoach.com. Just email me if you want this forecast model, subject line forecast, and I'll shoot it over to you.
Awesome. And for those of you who want some more data on what's going on out there with COVID and property management. Buildium, of course, publishes reports all the time. We have 2 recent reports, Leasing Demand in 2020, that covers what property managers are experiencing, have been experiencing over the past 6 months, as well as another survey just on property managers' growth outlook. And of course, in October, we'll be releasing the State of the Property Management Industry Report for 2021, which is a big deal. We do that every year with NARPM. So excited to try and pull everything together and put it all into context for property managers out there. So thanks again for watching. Until next time.